This is where it slowed down. You see the size trading. This is where I was like, you probably don't want to buy it because they can still sell it, but it's a logical place to exit a short if you're in a short. I realized I wasn't. It's, mythical from that standpoint, but it's not from the standpoint of demonstrating, how it rallies, how they stop it, and then when it falls back, it settles into a 3-tick range basically, and your size begins accumulating, and now you just stand back and wait for the next wave of momentum. But yeah, for anybody who's there, go ahead and send me your feed connection and your settings, and let me see if I can figure out what's going on with the going on with it. Okay. And I see all these questions, and I'm going to get to every single one of them before we're done. I just want to try and see if I can resolve this. All right, so it looks like the feeds or the bid ask is pretty much the same with everybody. It's the prints which are different. What about volume profile too, guys? Is anybody showing a significantly different volume profile from mine, or does everybody show about 75.99 at 15 and 5,019 at 4.5? Because those were new numbers. 578 over here in the 30 years. If everybody's showing the same profile as me, let me know. Or if you're not showing the same profile as me, let me know. Yeah, no, William, that's going to be different because I reset my profile by when I reset my chart by accident. So it's if your top ones where we just cleared those highs, those were all new prints. So if you go to your very top two prints, top three prints, um, the profile is the same. Okay, looks like it's the same then. All right, looks like it's the prints only. Thanks for your help, by the way. We're not missing anything, as you see, even though this is slightly annoying. I'm in agreement with you, but I just want to try and figure it out. Yeah, I know, William. Sorry, I just got to it. Like I said, this is part of the issue too. Whenever I'm teaching, um, I hope you guys are all right when it occasionally happens. I end up getting, action takes place, and I end up getting 12 questions or 15 questions at once, and then it takes me some time to scroll through them, and I'm trying to keep current on what's currently happening. So occasionally one gets lost in the mix, but I try and leave it up and get back to it eventually. So I make sure I answer everyone's questions. Uh, James, that might be if you're on the interactive broker DOM, that's probably the issue. I'm not familiar with it, so I can't really comment. It appears that pretty much everybody here who's either on XTrader or on Jigsaw is showing the same profile as me anyway. All right, that's interesting. So Chuck, on the 30-year over here, you are showing the 578 print, but then underneath that, you're saying you're showing 23 and 647. Is that what you're showing underneath? Okay. Okay. Thanks, Cindy. I got yours also then. Is it 23 and 23 is on the downside, red, and 647 is on the blue? All right, I'm not going to spend too much time on this, but now it's obviously a feed issue. Thank you, Chuck. Appreciate that. I'm talking to Pete right now, so we're discussing the matter. And Chuck, is your clear timers trade interval at 2500? Okie dokie. All right, we're going to revisit this in a minute. We're going to watch this action since we're getting a little bit here and it's pressing down. Having come off a high like that after a run, and now they're attempting to get all the way back through, I'm liable to take a short trade here and get run over again. But the long positions have really got to be hurting at this point. I mean, that run up, if they weren't out or if they were trying to buy on the way down, I would say they're concerned. Yeah, no, Cindy, we're going to cover a few more things today. Even if it's not a trade, I have some more questions I want to answer, and I'm going to cover a few more topics. I was just trying to see if I could get this straightened out. But it's looking like it might be because I'm on the TT feed and everybody else is on the other feeds, and they do filter their data differently through their routers. Well, it looks like, hang on. Looks like the feeds are 3,700 back into that, huh? I don't know. It shouldn't be that different. I wouldn't think. I mean, I know they handle their data in a little bit different way, and it filters. But the problem is that everybody here that's on that looks like they're on IQ or on CQG. They're all showing the same prints. You know, their prints are looking exactly the same, and they're all different from my prints. Anyway, by the way, this is why you don't buy that iceberg up there at 11.5 or 11 or 12, wherever it was. I guess it was at 12 when I was pointing that out earlier. Um, you just at that point you can use it as an exit. You know, you might not want to hold a short trade at that point, but you don't really want to look to go against that now, looking for it to bounce up. That's sort of what I was talking about earlier. what it kind of looks like to me right here. But I didn't. I'm just cutting off to stop talking for a second. It looks like, see, you see these bids? You see how big these bids are? And they're also in the 30 year. It sort of looks like you got some bids pumping up down here that are attempting to hold it up long enough to maybe dump off some more size in this area. We'll see how this plays out, but this is one of those sections where it's possible. Like you see this, you see, so only 375 actually traded on that, and now you got somebody hit right into it as soon as it went bid. And now they're doing their one lot machine gun fire thing. It looks like a spot where your sellers may start to lift their offers just enough to get some buyers to buy it up to maybe, in this area, 10 half, 11, something in there. And then they're going to sell it, and as they do, these bids are going to drop away. And if the bids drop away, it should fall back down in towards 9 and 8 half and take another run at it. That's kind of what I'm looking at right here. Because I'm seeing it across the board. Like you see the bids over here in the 30 year. So I'm sort of looking to pick my spot and see if I can't maybe catch one of these areas where hopefully it won't go against me, and catch it right as it's looking like the bids may start to pull like that. You see that? You see how that bid drops right there? Same over across the board. You buy it. Mm. It's like 70 print over here in the 5. But they are not tapping the 10 or the 30 just yet. So now you're starting to get a little bit of a divergence. So what I have to see here is, I mean, if it continues up 2 or 3 ticks past this, then I change my mind. But this looks kind of like one of the spreads where they're hitting the 5 up a tick or two. But what you see is they're not rallying the 30 or the 10. The 10 still has yet to go bid here. The 30 still has yet to go bid here. There it goes. Finally went. Pump up the bid. Man. And of course I could be wrong, but it feels like they're going to pump it up just enough, couple ticks, and then as soon as your sellers are done, all those bids are going to start to leave. That's what it feels like. We'll see. Now, if it gets past this by much, if it gets back up to the 12 range, then and starts to go through there, then I have to change my opinion on it, because it shouldn't get that high if I'm right. There's somebody sitting on 11s. Let's try it out. Damn. I got to keep a pretty tight stop on this one. They're pressing this a lot heavier than I was anticipating. I guess you saw that. You could see an iceberg hit right there. That iceberg is what was my trigger. I thought they may finally sit on it, but doesn't seem to be happening. I was looking for it to pull a little faster. I kind of have to ride this out for a second, because if it does play out the way I anticipate, it's going to take some size. And they keep hitting it. You see this? That's way more size than I was looking to trade right there. I was looking for this to already sit. Damn. I'm gonna end up blowing out at the worst price probably. Just bad action for me today. Bad action. I saw the divergence between the 5-year and the 10 and the 30, so that was kind of what initially triggered it. I could see the 5 was rallying and they couldn't get the 30 and the 10 up. So often that's a sign of a spread. That's a hedge usually going off quite often. So you got somebody selling the 10 and selling the 30 maybe and buying the 5. Then I saw this iceberg here at 11, but it's just not sitting. There's just nothing happening here. And the 5-year just popped again. I got nothing. Sitting at 45,000 on the freaking profile. I got nothing. By the way, you guys can probably see how it can be a little difficult at times to try and talk through these while you're actually in the trade. It's a lot easier to talk through it when you're not trying to manage it. And it's not, huge size or anything, but it's just you're actually in, and I can see it with my eyes fine, and my brain, it all registers fine. So I know what's going on, but when I'm actually trying to convey convey it and break it down as the trades are taking place, it can be a little difficult to follow. Like I've been contemplating scratching this now for a minute or two. They seem to be holding at 11.5, but I was already looking for these bids at 10.5, I'm predominantly also watching the 30 as well in this one. You know, I'm looking for those bids at 23 and 22 to give way. And then you see the step in the profile between 22 and 21, and then down to 20 again. So that's kind of a major level in the 30 year. So if the bids will give way, you might be able to force some selling underneath that. And that's what it seems like the sellers are trying to achieve here. But it's just taken a while for it to play out. And it may not. I still want to see, like, you can see the 5 year over there at 22. You know, it keeps going bid, and the offer keeps kind of pulling at 22 twos. I kind of need to see those 22 even stick on the offer and the 21 sevens give way underneath. Need a little confirmation, basically. All three markets are going to have to start giving way, because if they don't, nothing's going to happen. It's going to turn right back into a 3-sig market. There's a 1 lot. There's a 48 lot. Assuming my prints are somewhat on now. There's a 2 lot in the 30 year. It went offer. That's definitely good for me. If the offers can stick in the 30, they should be able to offer in the 10. But the 30 year has got to break 21 basically, which will drive the 10 year down to its lows. And then I'm probably going to be keying off the 30 year for what I'm going to do on this trade. See, like right here, those bids underneath have got to give way. If the bids at 21 and 20 can't give way, nothing's going to happen. If they will give way, then it sets the 10 year up for taking a crack at its price at 8.5. But with the way the action's been all day, you know, it's debatable as to whether or not anybody will have the huevos to do that. And from a management perspective, see, I mean, basically the way I've got to play this now is I want to give it a shot. I basically want to try and get paid on this if I can. If it comes back to my price, I'll probably have to scratch it. Like, see, from this point, I'm 2 ticks in the money. I have the free look. I should be about to be 3 ticks in the money. I have the free look. I want to see it go through those lows, because if it can crack 8.5, it should be able to go to 6, you know, or maybe not 6, but if it can crack 8.5, it should be able to go to 7, 6.5, 7. So that'd be a nice solid winner, and I'm willing to risk my 2 ticks right now to see if that happens, you know. But it shouldn't come back on me from this point. If it comes back to my price from this point, I've lost all my steam at that juncture, and I basically just have to scratch the trade, because I would never want to allow this winner to turn into a loss. I'm okay with it turning into a scratch, maybe, because at this juncture, I'm risking 3, say, or risking 2, really, only. I still can't even get 3. I'm risking 2 right now to make another 5 or 6. But if they can't move it past these 21s right here in the 30-year and these 9.5s, there's just nothing you can do about it. You just gotta just take a one-tick winner or scratch and just call it, basically. Because it should go. If it's going to go, it should go. But being as it's been such a slow, heavy volume, choppy day, really anything could happen. You know, they could easily step up to defend this spot. I just think if it gets down here, you should see these bids start to pull. Hopefully everybody can hear me, right? I think my audio is all good. Audio looks good. I know you guys probably have questions, but obviously I can't answer them right now. I'm just trying to. This is what I do when I'm in a trade. I try and talk you through my thought process on it, and I wait for it to be done, basically. And here we go. Now, if they can break these 8.5s and the 8s, they're going to have to get through convincingly. Like, see right there, I figured that would happen. So the 4,000 sits. Now that's somebody who has no problem taking 8.5 because that's the bottom of the range today. So right away that makes me, it makes you kind of want to go ahead and jump off. You're sitting in a decent winner, you might want to take it, but the fact that someone actually is selling 5,000 here leads me to believe that these bids underneath may give way. And if the bids underneath give way, I should be able to scalp out another, say, 2 to 4 ticks past this. And that'll put the 30-year right at its low, basically. And that's where you hope that your long positions start to panic and they start to bail. If they don't start doing that, then I usually just take it off and step aside. Maybe I get back in from the short side again. Maybe I just sit out. There's 1,000. That's decent. Got to clear it out, though. And hopefully you're following my numbers. I know this will make a lot more sense as you rewatch it on the recording. You'll definitely be able to line up what my thought process was. There we go. There's 3,000. Nice. And please, understand there is a luck factor involved from the standpoint of it did get there and now it's happening. They did give way. They didn't stick it at 8.5 or 9. I mean, they could have easily stuck it at 8.5 or 9, forcing me to maybe take a 2-tick winner on this trade back at 10. But this is, I've seen this before. It's not uncommon. It's playing out pretty slow. As you see it, it's not playing out as fast as the moves played out yesterday. So the fact that it's slow, you have to be kind of always looking to get out and pocket your profit, because these are the kind of moves where they may get it past 8.5 by 2-3 ticks, and then that'll be it. They'll just stick it because people are afraid to step up and sell it any lower. No one wants to really get hung right here. So what I'm waiting for from an exit perspective is a sign that you really have some buyers. See, like right now, you got some buyers. There are going to be some people who will liquidate. That's fine. But I'm looking for the sign that everybody's given up hope, essentially. And there you go. Right there, someone just hit 800 into 7.5. So see, that gives people more hope right there. Boom, they sell the 30-year at 17. Now your sellers who are still short, like me, they don't want to get out yet. But now they may change their mind. Now it went back bid again. You know what I mean? So everybody is they're holding, waiting to see if new money will come in to continue to press this. And as the new money comes in, they just continue to hold and hold and hold until they see it stop. Now right there you see 3,000 hit back up. So over 4,000 just traded at 7.5. So that means some guys are starting to cover down here finally. So if the 30-year can't break the lows here, you may see me take this off right around 7. Because now you're liable to see a 2 or 3 tick bounce back up to 8.5. I'm just waiting to see if the sellers will hold it or not. See them now. You see how they're buying the 30 now? Now it's not a lot of buying, but it's still, they're actually hitting back up into it. You see that the 3,000 print back up into 7.5. So when I start to see the bigger prints going back up into the offers, that's what starts to make me go, all right, they may, all right, there, did you see that? 6,000 trade, and now you see that? The offer drops away, you see that? Sons of bitches. Try it out. I can probably get this 4 lot off here, and I may be jumping out too soon. I went ahead and took 7.5. I may jump back in this, actually. Like, if it were to look like it was going through, I might jump back on top of it. But did you see that? Hopefully, I'm going to bring my questions back out. Did you guys see? These are the trades that make me look like a genius, and these don't happen all the time. Obviously, I mean, I'm wrong. I make bad trades. But, it's just not rocket science. I mean, I know I say that all the time, but this is what I'm trying to get across to you. It's like, it's not rocket science. You could see the 3,000 hit back into 7.5. You saw the offer pump up to 4,000 right at 7.5. You see the iceberg suck it down, 6,400 contracts at 7. And as soon as that traded, I don't know if you guys saw that, as soon as that 6,400 traded, that offer dropped from 4,000 to like 800. As soon as I saw that, I placed a limit order at 7 just to see, because sometimes it'll pump back up and the bid will give away again, and you'll get that tick. But it didn't happen. I could see it wasn't going to happen. And then they buy the 7.5s, and as soon as the 7.5s went bid, the offer at 8 dropped down. Because it was also offered at like 3,000 plus, and then it dropped down to like 1,000. So what happens is your offers just continue to follow it, pump, follow, pump, follow, pump up, and then finally the guy who's pumping it is like, all right, I'm going to drop some at 7. I'm going to buy it back at 7.5 and 6. And so he pumps. He gets filled. He drops his offers. People like me, smaller traders, whatever, they don't want to hold it anymore. They see it. They start buying. They jack it back up 2, 3, 4 ticks back into this area now. What a beautiful trade that was. You won't see me make another perfect trade like that for the rest of the webinar. That was about a perfect entry, perfect exit as you can possibly get on a move like that. So, take note, because my next 3 trades will all be losers probably. Okay, guys, I have got to take a throat break. Give me about 10 minutes here, if you don't mind. I'm not going anywhere. I'm still watching this, but just I'll come back and answer questions for you. Okie dokie. Hopefully you guys heard all that, and it should all be captured, so you'll be able to rewatch it frequently. I always check my executions and whatnot to make sure I am out. I mean, my box says that I'm out, but being as I'm still new to the Jigsaw and the Ninja and whatnot, I check my orders to make sure I'm flat. Right back to 9. Alright, give me 10. I'll be right back. We'll do some questions and we'll probably call it after that. Okie dokie. Everybody still with me? I know some people aren't. Some people can't hang out all day, but it looks like we still got some people here. Um, Couple of quick notes talking to Peter. Anybody who's on Interactive Brokers feed, apparently that's known for not being the greatest feed. You're going to miss some prints, and your profile numbers are going to be off. So I'm told anyway, and I know he's done tons of research into this because he gets questions from people every day. So the IB stuff is probably going to be off. With mine, I think it's a product of the TT feed that I'm on, probably separating me from everybody here who's on DTN IQ. Going through some of these questions here. Sorry, man. I'm not sorry because you're not supposed to be doing that anyway. But that's your prerogative, clearly, to do what you want to do. This is strictly educational. I make zero recommendations to do what I do. I'm just passing along information. I know everybody already knows that, but you got to put a disclaimer in there. It's because it's tricky at times. You have to. I really felt like I was on the right side, but you don't really know until it starts to move in your favor, So in those scenarios, basically, if you're going to take the trade, you've got to make the call just to take the trade. That's not really a scratch trade, and I know I was talking about it. I know when it was sort of, it was trying to shake me out. And there'll be other times where it does. You know what I mean? There'll be other times where that just doesn't hold. But I really thought that trade was going to be good. It looked like it was going to take a while to play out. So that's part of trade management. That comes with experience and time, basically. Uh, So Scott, I just asked Peter about this. He said, in regards to a new session and the settings, he said you set up a session template for the chart, and then like what time to start what the start time is, etc. And then there's an option within Jigsaw that allows you to reset all values at the same session start time. This is actually something, honestly, if you have Jigsaw, you need to talk to Pete about, because I'm obviously not the guy for Jigsaw technical questions, since I didn't even know how to alter the price within the button yesterday. Well, that's what he told me, so you can feel free to write him. He'll email you back and tell you how to do everything. This question, yeah, the big players who are on XTrader, they see the same profile totals as us, so they're seeing the same thing. You also have to remember there are firms that, damn. By the way, this is that green screen that you see. And I know some of you noticed it in the videos. Hold on, I gotta find my buttons. That's not it. There it is. Yes, no. The green screen is the GoToMeeting webinar software clashing with my graphics card. I don't know why it does it. They had no good explanation for it. They could not help me with it. So, but it happens, so whenever it happens, I just refresh my screen real quick, and that eliminates the problem. Then I have to obviously open up my Windows back again. But that's what that is. 1 second. So some of the bigger firms, they have their own front-end platforms. And I know that there are some out there that are probably very much like this. So they do show the different prints. They all have volume profile. And to follow up with your other question, if the bigger players are on TT, shouldn't you be on TT? Really not. I mean, that's where I'm kind of going with this. The technology has advanced so far in the last even just 5-6 years that the players, the other platforms and whatnot are all coming up to speed with TT, and honestly, I wouldn't, trust me, I wouldn't be using this if I didn't think it was helpful. I honestly think seeing these split prints and being able to see them, even though they're obviously different from yours, in a way, they must be somewhat similar. I mean, we've got 6456 printed down, and the profile is exactly the same. So I'm assuming everybody's profile is exactly the same as mine. So it's just a matter of the way that the data is being disseminated. But really, this is helpful to me. I mean, I've been doing this a long time, and I make good calls and whatnot, but being able to see these prints is really helpful to me. I think it helps give me a little more of an edge at times. Helps me to find when to stay in trades, when to hold them, when to exit, etc. So, like being able to see that 3,000 right there, that's the kind of stuff that. That's the kind of stuff that. Shit. All right. My bad. I was making sure my volume was on. That I'll miss in X-Trader sometimes. So, like, I'll be able to see the bids and offers, no problem. You can see that taking place. You can see the profile changing. But, like, when we got down there and it was printing 7.5, as soon as the offer hit 7.5, I saw that 34, or it wasn't 34 at that point, actually, now that I think about it. But I could see size hit back into 7.5. You know what I mean? So up until that point, what you were seeing was at these levels, when you go back and you watch this, you were seeing predominantly red. They were selling the offer. Nobody was really hitting back. I mean, they were selling the bid. No one was hitting back into the offer. So sell the bid, not hit the offer. Sell the bid, not hit the offer. Sell the bid, not hit the offer. Finally, at 7.5, they sold the bid. It goes offer, and someone hits size back into the offer. Now, that's not always enough to stop the market, which is why I sat there for a second. Because that market still could have broke down from there. That might just be one person trying to exit, their size. But then when I saw the iceberg get filled for 6,400, and then the offer pulled away at 7.5 and they hit 7.5s again, that was my trigger to exit. And so that was the first area pretty much between, I guess, 9.5, since 9.5 where you saw size hitting back into the offer. If you go back and watch, what you're going to see is not as much blue, hitting back in, and then it starts down here. And so at that point, you just take off the trade, you stand aside for a second, and you see what happens. Because if you still see a tons of pressure holding it at 8.5 and 8, you can just hit back in at 7.5 or 7 again. You know what I mean? You can get back in the trade. Maybe you give up a tick or two. It's fine. You can always get back in. But you have a legitimate reason for exiting that trade and not letting it pop back on you another 2 or 3 ticks like it did. Because you can believe if I didn't get 7.5s, I would have been out at 8 for sure. So seeing that kind of info within these split prints, I got off track, is an edge. It's an absolute edge. So I'm a fan. What can I say? I am. I've been a fan of this for a long time, and it's working out for me. So I have no complaints. I'm a happy guy with the platform. I don't think anybody with XTrader has an edge over you. The only people that have edges over you are firms that have co-located servers on the exchanges, because they're reading the bids and asks faster than you can read them. They can actually see as the bid drops from 2,000 to 300, they're actually reading that as it's happening, almost contract by contract. You know what I mean? Which is what allows the high frequency stuff to jump on board so fast and to always be the first orders in the queue in line. But anybody who's just watching XTrader with their eyeballs and clicking their mouse to enter and exit like we do, I don't think anybody on XTrader has an edge. I think people with Jigsaw have an edge over them, assuming, again, solid feed, solid order routing, fast executions, etc., etc. But just from a sheer platform perspective, I think it just gives you an edge up. I really do. So, enough on that. Yeah, man, there's a huge difference between the S&Ps and the Treasuries. And we'll get into that. Next week I'm going to do some ES trading. I like to start with the Treasuries because obviously it's what I know, it's what I'm the best at. But it's also, in my opinion, all the concepts that I use are applicable to other markets. But they're easier to identify in the Treasury. It's like it was so, and maybe it doesn't seem easy to you because you're new to it, I get that, but it's so easy for me to explain that and for you to see it in the Treasury markets. It was so easy for me to point out those big bids and then say, okay, now watch these big bids. If I'm right, you're not going to see 4,000 sit on that bid. That 4,000 is going to drop down to 2,000 or less. And you could see it as it was happening. You know what I mean? If I'm right, they're going to give way at 9 and 8.5, and as soon as they do, you're going to get, the market's going to push through by at least a few ticks. So it's really easy to point out that kind of action. And you can then take those concepts and those ideas, and you can apply them to whatever market you prefer to trade, because the concepts are all the same. You know what I mean? It's just execution is different, volatility is different. There are certainly products that are more easily influenced by lighter volume and spike easier, on news. Anybody who trades crude is also, for real, is also following Brent and WTI, so I think it's WTI. So you have markets like that where guys are watching other markets, but the overall concept in your liquid markets, which are the treasuries, the E-minis, the Bund-Babel, German treasuries, the Euro stocks, and really even corn and some other markets that are a little bit thicker, It's all pretty much the same. It's guys just trying to make moves all day long, you know. And you'll get some longer term plays in there, but that's predominantly a short term play right there. There were guys, they saw it. It basically made a run at the high and got stuck. You know, so your sellers were able to stop it and shove it back down. So at that point, your sellers, they have the momentum and they just sit on it. And finally they sit on it to the point where they're like, all right, we're going to make this thing run through the lows. And you got to understand, a lot of those guys were already the bids down here anyway. So you take a guy who's short from 13 half, 12 half. He's already working big bids at 8 half, 9 half, maybe even 10. It gets down here and he realizes that he is the majority of these bids, or a few guys. I was explaining this to somebody in an email yesterday. The reason big traders have an advantage is not just because they can move the market, but it's also because they can see for how much of the market they account. So let's say in a move like that, the market hits 9 half. Let's say you got a guy like the flipper, Paul Rotter, right? And he's not really sure. So it hits 9 or 9 half, and you see 1,600 trade, right? And Paul Rotter was 1,500 of that. So he goes, okay, someone just hit me, and I am the only guy buying here because 1,600 trades and the market instantly goes off or on top of him, and people start hitting 9s. In his mind, he realizes he's the only buyer at 9 half. So he can instantly turn around and reverse and smack 9s and 8 halves, exit his trade, get short, and then he's already working, bids at 8, 7 half, and 7. They have the advantage of being able to not just move the market with their size, but also to be able to see, like I said, how much of the market is them. So let's say he's working that order for 1,500 and then 5,000 trade there. Well, now he knows he's not the only guy buying there. He's like, all right, it's me and some other guys, so I got a little bit of support here. Let's ride this out and see what happens. It's a tremendous advantage. Tremendous. Granted, you got to work your orders a little differently because you're moving huge size, so you can't be working at one tick. You know, you gotta do a little bit of scaling when you're big size, which you should never do when you're small size. I'll get into that later, but it's just a huge advantage. So what happened was they were pumping the bids between 9 and 10, basically. I could see that, and letting it rally, and they were selling at 10 half, 11 half, and 12. And then finally, when they pretty much sold all they wanted to sell, they started to pull these bids away and hit some more in an attempt to drive it down. So as they were driving it back down through 9 half and 8 half, they were already working orders at 8 half, 8, 7 half, and 7 pretty much. You know what I mean? So those guys are out and they're done. They went to lunch and then they're going to the bar to drink heavily. And I know I joke about that, but it's true. I mean, I'm not making that up. Some guys ride it out all day long, but if you've ever hung around a group of traders for any length of time, you begin to understand the mentality and the mindset. So if a guy just made $100,000 on that move, he has no reason to sit and trade till 3 p.m. You know what I mean? That's a pretty good point. Yeah, the ES, like I said, my buddy and a lot of traders, the term is it's crack for traders, uh, whereas the treasuries are like weed for traders. It just is so erratic. Let me get to this. I got a few questions. I'm going to go through these questions and answer them. I'm probably going to call it. I'm kind of running out of steam today. So, Chuck, he says, I'm sure we'd all like to map out your brain into some basic steps to help the progress. This is where it gets to be a more of an experience thing on your part. Like, I really did try to do my best just then, and I'll continue to do so throughout this webinar, but I really did my best to explain what's going through my brain in that trade as it was happening, which I don't think I've ever done that good of a job, even to be honest, while I was in a trade. It's usually kind of difficult because I'm trying to watch 3 platforms, and I'm watching the bids and the offers and the prints, and at the same time I'm trying to explain to you what I'm seeing with how the bids are pumping, how they're letting the offers go, how you see the hidden order, that's my trigger, blah, blah, blah. So what you basically have to do is like you'll start to see the same stuff happen over and over in these markets, and I always try to answer questions the best I can, but what you'll find out is that after the webinar is over, you'll need to review these videos, and of course particularly the trades, but even some of the discussion stuff, and just rewatch them over and over again until you see what I'm talking about. Like if I say something like, did you see that hidden order? And then you didn't see it, rewind the video and keep watching the video until you see what I mean. Because once you start to see the things that I'm talking about, like I'm sure hopefully everybody saw this when it happened. I mean, I think there was only 2,000 or something on the bid at 7. And then when it traded all this at once. And the reason it traded all that at once is because guys were hoping for this market to crack the lows. So there was only 2,000 on the bid. As that 2,000 was trading and disappearing, you had a big amount of orders pile on top of that, because like I was talking about yesterday, everybody's like, high frequency is bad, high frequency is bad. High frequency is not bad. And, I mean, in my opinion, it's not such a problem for that very reason, because that's a hidden order that a guy is working. And the high frequency programs can't see that. So you get a program that is, it's looking, it breaks the 8 halves, and now you've got programs that are all looking to go short. None of them are looking to buy. So these programs start looking to go short, and each time a level gives way, the program wants to be first in line and try and get that. They want to get short and have the edge, like I do pretty much, but they can accomplish it because they're faster. So they want to hit the price as it's leaving, and they want to be short immediately, and they want to see prints hitting the next price down. So in a trade like that, a guy is working a hidden order, and he allows it to go, and all these programs jump on board because they all want to be first in line, and they all run into a brick wall, which is a guy like Rodder going, fuck you, pardon me, I'm going to say that sometimes, but, going, take this, I'm going to I'll buy 8,000 here, you know what I mean? So somebody buys 6,400 and instantly bids at 3,000, and now all the programs are like, uh-oh, that wasn't supposed to happen, you know what I mean? And then the offer drops away above, and it's immediately 7.5 bid. So those are the kind of the things that programs can't read in the same way a human can read. They do have the advantage at when it is moving and they can't get the edge. They do have the advantage sometimes in playing ranges, because of their speed, but it's all give and take. So don't let anybody tell you that the markets are unbeatable because of algorithms. And don't let them tell you that order flow is unreadable because of algorithms. It's nonsense. What they're saying is they don't know how to do it. And what they're saying is they, either they used to know how to do it and they don't anymore, or they never knew how to do it. Trust me, the markets didn't they've always moved in a somewhat similar fashion in terms of bid, ask, offer, whatever, but these markets didn't used to move like this when I started. When I started trading, man, we hit a bond boom, and the 30-year Treasury bond would run 45, 50 ticks some days, just straight in one direction. There were days where I would hit a price, I could get 25 ticks going up and then reverse and get 12 ticks coming straight back down. It was a beautiful thing, let me tell you. It felt like the guys must have felt in the NASDAQ boom in the 90s. Obviously, that does not happen anymore. A lot of guys fell by the wayside. They could not adapt once it changed. The volume got thicker, the programs came in, things changed up. They didn't know how to adapt. They were used to swinging whatever. Maybe they were used to swinging 50 and hundreds. And then it got to the point where they would have to swing 200 or 300 and capture smaller moves, and they didn't like that, and they gave up, or they tried to also join the crowd of program traders. And I mean, like I know some people, I think there's actually a few who are here right now, and I always get contacted by guys who try to get jobs at prop firms. Very, very few prop firms hire scalpers. Like 1 out of 100, or there probably aren't even 100 prop firms in the world, but it's a rare thing. Even if you make money, doesn't matter. They just don't want them. They're all caught up in either spreading, or they want quants and programmers because they want a computer that they can turn on in the morning and it'll act as a big ATM for them. And occasionally, some guys develop one that works for a while and they bank huge. It can happen, but you've got to adjust your program to adjust for the markets. And what I found interesting there's an interview with the Flipper, recent interview, just a couple years ago. He actually said the same thing himself, which sort of reconfirmed my opinion. I mean, I already had the opinion, but it's nice to hear a guy that trades that kind of size say the same thing that I'm thinking, which was he didn't think that computers could trade as well as a human still. He said, yeah, they have the edge in certain cases. It's definitely different markets. But he still felt like humans could make calls that computers couldn't make. Because they're computers. They're crunching numbers, you know what I mean? They don't have the feel for the market. They're entirely, everything a program does is based on coding. It's all based on number crunching. So they can't, right there, and I'm not hyping myself, because obviously I'm wrong at times too, but what I'm trying to say is, I could feel that the pressure was building to the downside. Once we came off the 11 halves and got to 9 half, it was almost guaranteed in my mind we were going through 8 half. You could just kind of sense it, and that comes with experience. A computer doesn't sense that. A computer is reading nothing more than the print, and sometimes maybe that's a benefit, but other times I think it's a hindrance. And that's enough of that. Alrighty. So I guess where I was going with that, Chuck, back to your question, with regards to the mapping thing, I do my best to talk through all of it as it's happening. I try and help you out, sort of try and explain why I get involved in certain areas and not in other areas. Like I said, even if I had been short, and I should have been, I had absolutely no sand or grit today on that trade. I should have been short at 15, but even if I had been at, say, 15, 14 half, whatever, there's no doubt in my mind I would have exited at 12. When I started to see it bounce between 11 half and 12 half, I would have taken that trade off, because I don't know at that point. I know, you would know that you caught the reversal you caught the pullback. So you're on the right side. Market is, 6 ticks in your favor at 12 half at that point, or maybe 5 ticks, whatever. You got a 5 or 6 tick winner. You see it run into a wall. You don't know at that point. Maybe it'll go back to the tens. Maybe it'll go back to 15. I don't know. What I do know is I had the pressure going in my favor, and then I lost the pressure. Same thing down here. I knew I had the pressure going in my favor. Sorry about that. Between 10 and 8, I knew I had the pressure going in my favor. Right there, I knew I lost the pressure. So I get out. I stand aside. I wait. In that particular instance, it proved to be the best exit possible. Had I not, already been working at sevens, and there was no reason to work at sevens. I mean, I'm on the right side. I've got the edge. I've got a great winner. Those sevens could have given way, and it could have gone right to 6, 5 half. So I don't, in that kind of a move, you're not going to catch me working a bid. You'll get out way too early usually. I'll end up working sevens, and then I'll get filled as the market goes to 5 half. So I'll give it time and wait and see how it plays out. But as soon as I see the pressure stopping, I get out. William, I know you asked this a long time ago, but I didn't buy this morning because I just don't like that kind of action. It's a personal thing. That might be your kind of trade all day long. You know what I mean? You may be perfectly fine buying 9s and blowing out at 8 if you're wrong. I can certainly appreciate that call. It's a very minimal risk type trade. The way it was trading between 9 and 10, I had no conviction in that from a long perspective. And that's why I didn't take it. But you can certainly make the argument to do so after seeing all that size trade at 8 half. I just talked to Pete about this TT thing. He's actually going to get a demo and try it out himself because he also he goes through the Kinetech DT and IQ stuff. So we're going to test it out and get back to me. I think it'll be all right for the purposes of the webinar. I mean, you're still seeing the prints go off and you're seeing the movement. You can reference my videos and compare them, but I am going to try and work it out because it would be nice if we were all on the same page, obviously. Yeah, he just wrote me and told me that. He released a new beta version. He sent it to me. I told him I don't know if I should install it. It's liable to crash during my webinars. I'd have to come to Thailand. That's a possible problem too. I'll look into that, Richard. Thanks for pointing that out. That may very well be it. The way my trades are set up to be clearing, something may be happening with how they're clearing. Okay. So Chuck, let me continue. You have a couple questions here, and they're all good. Following up on that, I know this approach is mainly observation related. Are there a few steps we can develop to approach looking at the DOM? Okay, for instance, number 1, look for key points. Absolutely. So let me break this down for you. This is pretty good. We'll move on with this. Always be aware of the key points. The key points are steps in the profile, the day's high and low, and a previous number, like we pointed out on the chart this morning. These levels, right? So there was a bottom down here. Let me back it up so I show you this number down here, right? So that's where you want to start your day, basically. Start your day looking for any key levels from previous days and the previous week. Then look for your overnight steps in the profile. And of course the overnight high and low. That's where you'll begin. Yeah, so now step 2, if it approaches that area, you look for speed and volume. Absolutely. So, for example, we saw it approach those 8.5 several times this morning, but there was no real pressure in either direction, which is what I was just telling William. I tried to short it, I lost a tick. It just basically bounced between 9 and 10.5 for hours, and hence the reason you see more volume really here. There was just no real call. So if you don't see any speed, you don't see any pressure, you don't see anybody hitting 8.5s and actually actively trying to get it through, you stand aside. You can start making calls when they are trying to get through. Step 3, it's not a methodology per se, as like with an if-then or a concrete set of rules, but you want to have a framework, and that is a framework. The framework is to try and distinguish the areas where the market should move through fairly quickly. And I discussed this in the first day of the September recordings. And I also discuss it, I think, a little bit in my jigsaw demonstration I did with Peter. That's on my YouTube page also. We did a ninja jigsaw demonstration. One second. I need 2 minutes. Give me 2 minutes. Just wanted to stick that up. Somebody said the session customization is on the Jigsaw site. That's pretty funny, actually. I doubt that's the case, but that's pretty funny. Yeah, you're playing with the TT feed players, Scott, but these feeds are usually pretty identical. The difference in the split prints is is something else entirely. I mean, if your profile levels, your profile volumes are the same, it's probably an issue with either how I have my Jigsaw running or something on my particular TT feed. How I have it going. There may be other TT feeds that are the same. I'll figure it out. Finish this. Richard, the only hedging I do is a Texas hedge, which is all in or all out. I think hedging is a bad idea because you shortchange yourself whenever you're right. I don't want to be right and make 2 ticks when I could be right and make 8 ticks. You know what I mean? It just doesn't make any sense to me. That's why I don't spread either. Someone mentioned this earlier. I wanted to touch on this tomorrow. He's talking about selling it at the high and then doubling down if it goes above. I'm not a fan of doubling down, but I want to go into length of that at a different time, so I will discuss that later. All right, give me a few more minutes here so I can chat, and we'll probably call it. Okay, Chuck, that was an order that was refreshing at 15. So what happened there? That's why I was thinking about shorting there. Was I finally saw a spot where they couldn't get the 15s to go bid. So what happened was it did trade 15. It traded 106. Some poor bastard got caught trading 106 at 15.5. And then it instantly dropped back on 15. And then from that standpoint, they were trying to buy it and bid it, but the refreshing order just sat there, and they could never buy enough to make it go bid again. And that's what you want to see at pullback points and reversal points. You know, same thing there. It never actually went offer down here at 7. They traded 64.56, and the bid instantly refreshed, and it never did go offer. Never printed 6/2. So that's what happens, and those are the kind of areas you look for exiting or possibly reversing. I needed to see how it played out. He's asking why I didn't put a stop limit in, I guess at 7.5 maybe on the way down. Is that what you're talking about? Yeah, like a trailing stop. I'm not a fan of trailing stops, at least not by a tick, because that's where granted, you got to have the discipline. A lot of people don't, so I get it if you want to use a trailing stop to guarantee your profits, but there'll be other times where I may be in that trade, and I actually do want to watch how it trades between 7 and 8. You know, because it doesn't do this. It's not the same kind of action. It's just a little back and forth, a little back and forth. Maybe they printed some in the 6/2, and I think it's just going to hesitate here and then continue down farther possibly. So there'll be times when I do want to actually see that trade back and forth. Or I don't want to see it trade back and forth, but if it does, I want to sit through it and then if it stops and I have a feeling that I'm on the wrong side, then I'll not make as much money, but I will have still been in the position to have made more. You know what I mean? So that's very much a discretionary thing on my part, and that's why I don't use stop limit trailing stops. Exactly. So you don't want to put I wouldn't have wanted to put a trailing stop at I guess that's 8. Is that what that is? Sorry, I'm losing my yeah. At 8, because when that 20 lot or whatever hit 8, it would have filled me at 8. Instead, I got my limit fill at 7.5, so I got the extra tick on that. You know what I mean? Um, so if you really want to be out, you can always just mark it out. That's a bummer, but yeah, I mean you gotta. That's the problem with stop orders. You know, it ends up trading a price, and you don't see how it trades. You're just automatically exited, and you can't see whether or not an iceberg sucks it up or whether it's just some back and forth action. So you instantly hit yourself out. I think stop orders are only good for emergency exits. You know, like I said, what I don't do, which you should probably do, which is I sell 11s and I instantly put a stop in at 13, you know, or something to make sure that if my screen goes down, I get out of the trade if it rallies against me. But or if you don't have the discipline. Now, if you're the kind of guy that like you'll watch that trade, you know, come all the way back to 10.5 on you, you should put in a stop. And you should at least take, you know, 3 or 4 takes out of the trade. Um, but if you have the discipline to follow it, you're probably better off just using your market orders or your limit orders. It depends. Sometimes 2 ticks, you know you're wrong. Sometimes you don't. Um, well, see, Chuck, what I'm talking about is what happened was the 15s actually went bid just for a second, and then you know they sold back down on top of those, and then the offer sat there, and they couldn't buy it enough to pump it up again. Uh, so it was kind of sketchy at the time, um, obviously since I didn't take it, but it's definitely something that usually indicates it's running out of steam. Yeah, an emergency stop loss isn't so bad. This is a pretty decent question. If you weren't short at 11, where would have been the spot to get in? The spot to get in would have been around 10, 9 half, 9. You want to be in prior to it breaking the level. So once you start to see those bids give way, like I thought was going to happen, you want to jump on board. You are going to have a little more risk at that point because you can't just jump right out for a 1 tick loss or a scratch. But you're on the right side, and you're just a little bit above the 8 half. So by the time it gets to 9 half, it's most likely going to at least go to 8 half. So you want to be in between 10, 9 half, and 9 and take advantage of the break through 8 half because as you see, that's normal. It'll break the level by anywhere from 2 to 5 ticks and then often retrace back into the level. So that's where you would want to be. You don't want to be trying to short at 8 or 7 half really on that kind of a trade. You want to try and get in before she goes. That's a before she goes trade. Bill, you're correct. This was a trade within a range. Um, the reason I was able to take that trade where I did is because I recognized the price action of the bids pumping up in what looked to seem, it looked to be they were pumping it in order to sell it, and that's something that's really it goes beyond the basics. It's definitely a experience type thing. But if you'll rewatch it, you will see what I was talking about. You'll see how the offers just sort of lifted, and they were lifting, and the bids were pumping up, and what that was really sellers just trying to allow the market to rise 3 or 4 ticks so they could sell at a better price. At least that's what it seemed to be to me. And I figured if I was right, which I didn't have to be, I could have been wrong, but if I was right, eventually they would sell everything they wanted to sell, and then they would pull those bids, and when they started to pull those bids, the entire thing would give way, and it would drop back to the 8.5 level. No, no. You mean the high of the day and low of the day being 6,000 or whatever? Um, you mean you're concerned about the fact that it was 6,000, or what's your question exactly? No problem. Yes. Again, the stop loss emergency would, in theory, protect you against a flash crash or something unexpected. However, when that happens, what usually happens is all orders disappear, and you may think you're sitting at a 6 tick guaranteed stop, and you end up with a 20 tick stop, which is still better than a 40 tick stop. You know what I mean? So, but I had a guy ask me about that. That's never happened to me one time in my life. I've never been in a trade that snapped against me like that. And I think that's because, granted, you never know about news events, but usually if you're just trading the morning sessions, you're good to go. I mean, you stay out of the big numbers and pick your spots, and unless something freaky happens, you're going to be all right. But well, that would certainly suck. So I can understand. And I mean, in that case, yeah. I mean, if you've had it happen to you, I get it. So just make it a habit to do it whenever you put a trade on. Yeah, but sometimes the 6,000 doesn't kill it. I mean, sometimes it trades 6,000 and they plow right through it. So it's more a matter. It's not necessarily just the volume or the size of the volume. It's how it trades. So this was an iceberg that instantly refreshed, and then the offer above it dropped from 4,000 to 1,000. Um, so the action is what actually determined my exit there, in combination with the size. Just seeing, like, if it had gone 2,000, 2,000, 3,000, 1,000, 2,000, and it had added up to 6,000, so that's what was preventing me from doing it up top. If I had seen that same action up top, I would have been short. But I wasn't seeing the same action, so it kind of wigged me. Um, so it all depends on the action combined with the volume. Context is definitely key, and that's something that comes with time. But it is absolutely the most important part of trading, in my opinion. Is you have to understand the overall big picture, and you have to have a general idea of how things are going to go down. I mean, like when you go back, really, this may be I mean, hopefully not, but this might be like the best example you see for like just a perfect execution. Everything I anticipated happening happened. And but I've seen it before. That's why I anticipated it. So that's the whole key. The whole key wasn't just that I saw him pumping it and I saw an order and I wanted to get short at 11 because I was going to scalp 10 half or 10. It was all about I'm going to get short here because I think this will drop away to 10 9 half, and if it does, it should hit 8 half, and if it does, it'll probably get through by at least 2 to 3 4 ticks, maybe more if I'm lucky. So I already had that entire, as Chuck was in the map, I already had that entire scenario mapped out in my head before I placed my order. Once the scenario is mapped out, then you focus on specific price action to try and pinpoint your entries and exits to the best prices.